Hello, ladies and gentlemen. Good morning, and trust you are doing well this morning. I'm so excited to be here with you this morning again as we are going to be taking a technical dissection of the currency pairs and financial instruments that we have been monitoring since the beginning of the week. It's a Thursday, the second to the last trading day of the week, which has some potential level of activity as we head into the later part of the week. And for those who are around, you're welcome once again. I would like you to let me know in the comment section if you can hear my voice clearly, and I hope the quality of the sound isn't clippy at any way. So please let me know right in the comment section. I will really appreciate your feedback. And for those who are joining us for the first time, I'm so excited to have you guys around as we are going to be having a fresh look in the market. So what we simply do here on a daily basis, we have a series of financial instruments that we have chosen into our watch list bucket during the course of the weekend, which I normally share the videos during the weekend. I have the link to the videos right in the description box of this current video that you are watching right now, so you might want to watch this, and it is quite important that you watch this video so that you can have a background knowledge of what we are talking about here, because basically I'm going to be deliberating on the 1 hour time frame, so I wouldn't be going into the higher time frame. So for you to have a better understanding of how we got to this point and why we are making whatever decision we are making at this particular point in time, you will need to have a background knowledge. So I would really appreciate you watch those videos so that we can all be on the same page together. So I have the link in the description box below, and to make things easier for you to watch, I have it time-stamped so you can easily navigate and focus on that particular area that you want to watch. So with that being said, I welcome you guys once again. I can see Leon B. Thank you very much. Okay, thank you very much for that confirmation. Mahan, good morning to you. Glad to have you around. So with that being said, here we are going to be diving right into the business for today, and you all know how we do it. Before we kickstart, before going right into the chart, we want to see what is really going on from the fundamental aspect. And talking about the fundamentals, looking at the economic calendar, we are going to be focusing on high impact events that will be affecting the currency pairs that we have been monitoring since the beginning of the week. And these are pairs. The pairs includes the US dollar, the Japanese yen, and the which one is that again, the pound sterling. And for today, Thursday, April 27, we are looking forward to this most anticipated GDP annualized for Q1. This is going to be the first estimate of the first quarter on the gross domestic product, which is a forecast to show an annualized expansion of 2% following the 2.6% growth recorded in the last quarter. Now, what is the importance of this GDP? It shows the monetary value of all the goods, services, and structures produced within the US economy during a certain period of time, which is the last 3 months. So it's a gross measure of market activity because it indicates the pace at which the US economy is either growing or decreasing. And from the look of things right here, we have the previous data which is stipulated at 2.6%, and we have economics projecting a consensus of 2%, which is a little bit deep on what the previous data is. So we are going to be looking at how participants in the market will be anticipating this event, looking at the technical structures on the current market structure. So for today, 27th of April, this is the only high impact event we are going to be focusing on today. So let's dive right into the chart and let's see what is really going on in the market and how we can actually manage our trades and at the same time look out for more trading opportunity during the London and the New York session today. So with that being said, let's dive right into the current market structure. Akshay Amin, good morning to you. I'm so excited to have you around. Trust you are doing well this morning. All right, so with that being said here, let's dive right into the business for today. And as usual, the first commodity we are going to be looking at this morning is the US oil. And in fact, in the last 24 hours, we had this massive move to the downside, giving us about, how many pips is that? Giving us about over 200 pips on this one, as price action is currently trading within our TP target zone, which was stipulated a couple of days ago. So let's quickly run through how the week has started for us on the US oil and what our intention will be as we plan ahead of both the London and the New York session. So looking at the structure we have here, you will see that the week actually started on a bearish note, as we saw here. I hope you can see my screen clearly. I would like to zoom this a little bit in so that it can come in well presented. Okay, so the beginning of the week, we had this bearish momentum at the $77.65 level. That was actually where price action started the week. We saw it drop into that demand zone, had a $77.69 level. And you all know that whenever we have this kind of simple consolidation phase where price action is trapped within a range, we want to remain patient to look out for a signal which is definitely going to be coming in the form of a breakout of the resistance line or the breakdown of the support line for trading opportunity. And with our stop order placed at both ends so that we can capture whichever way price action will be going for the week, we had our first buy position triggered at the breakout of the $77.65 level. And that same Monday as well, we also had the breakout of the $78 level, making us have two positions on that one. And we rode the move all the way to the upside before we begin to see the whole selling pressure begin just exactly at around that $78.85 level, giving us a consolidation phase, which later led into price action diving right into the downside. Now, I shared with you the importance of the structure as we saw on the 4 hours time frame, and for the sake of those who are not part of our live session at the beginning of the week, I would like to share with you what the structure looks like so that you can have a better insight into what we are talking about here. And in order to do this, we shall be looking at the 4 hours time frame, obviously. And the first thing we observed on the 4 hours time frame is the fact that price action has been bullish since the mid-month of March. And to emphasize the strength of the buyers in this market, we can see that we have this trend line figured out after connecting the series of higher lows. But that is not where it got interesting. It got interesting when the breakdown of that structure happened last week. And let's zoom into the current structure so that we can see things clearly at this point. So we saw the breakdown of the trend line here, and this was the structure I was sharing with you on the 1 hour time frame, and that is the $78.85 level where price action was trapped within the channel for about 16-18 hours before we saw the breakdown of that structure. And in fact, this whole setup lined up with the technical expectation that whenever price action breaks down a key structure like this trend line that we have that was broken down last week, we expect that one point in time price action will come back to do a retest of that structure to incite another wave to the downside, which is exactly what happened here in the last 48 hours. So it has been a very jolly ride for us on the bearish note on the US oil in the last 48 hours. So congrats to everyone who has been on this profitable journey so far. And I'm very sure some of us will have taken our profit because we illustrated the TP target zone. Let's go back to the 4 hours time frame here. So remember, we had our TP target zone for the sellers within the $75 level and the $70.50 area, which price action is currently trading within. And this was as a result of using our Fibonacci retracement tool, running it through the previous impulse leg, and then it gave us that golden zone area, which is always between the 50 and the 78.6% of that previous impulse leg, as you can see on your screen right now. Now, the whole idea about this retracement is that after this old impulsive move that started during the later part of the month of March, I'm of the opinion that at one point in time, those who had actually bought the US oil commodity at a very low price will want to be doing some profit-taking activity, and this would reflect on the chart as a retracement of that impulsive move, which is what we have seen so far in the last couple of weeks, as we are expecting that price action when it comes into this golden zone area. We are likely going to be seeing a reversal pattern, which will come in the form of buy pressure right on our lower time frame, so that we can be part of the trend continuation to the upside. So these are the things we are going to be looking at, and right now we are at a critical point in the market where price action is trading within that zone that we identified a couple of days ago. So like I was saying earlier, some of us will have taken our profit and some of us will still be in this trade. And for those who are still in this trade, what do we want to be doing now? You all know what we do. We want to ensure that we secure this position by moving our stop loss accordingly to lock in some profit, as we don't want to lose out on whatever we had made so far. So what are we going to be doing, and where will our stop loss going to be at this point? So let's scale back down into the 1 hour time frame and let's look at what is really going on in the last 10 to 12 hours in this market. So as you can see here, price has been caught within a consolidation phase right within the $74.60 level and the $74 area, to emphasize some level of indecision in this market. So personally, I would suggest that you move your stop loss to anywhere right around the $75 level. Obviously, you want to give room for price action to breathe, with the hopes that it will retrace at one point before it incites the trend continuation to the downside. And since we are still within the TP target zone, we want to maximize as much profit as possible from this current structure. So with that being said here, moving your stop loss to lock in some profit, the next thing we want to be doing at this point is to look out for how to trade the US oil today. Are we continuing selling the US oil today, or are we going to be buying the US oil today? So these are questions we want to be answering from this point on. Now, the first thing we are going to be doing here is to acknowledge the fact that price action has been bearish, at least since the later part of Monday's trading session, as you can see. And if we bring out our line chart, things become a little bit clearer. So we have lower highs, and what we normally do when we see lower highs is to connect it, giving us that bearish trend line, which definitely is going to be serving as our yardstick going forward. So as long as price action remains below the bearish trend line, we shall feel comfortable in our sell position while we look out for more opportunity. And there's also the tendency that price action could still retrace back into structure, that is into the trend line, or even go as far as the $77.69 level. Remember that structure, which has been a strong buying niche in this market since last week Friday. As you can see here, it was a very strong buying niche where sellers were finding it difficult to break down that structure. And during the course of yesterday's trading session, we saw the breakdown retest of that structure to give us that opportunity to be part of this move. And from a technical standpoint, whenever price action breaks down a structure, we expect that at one point in time it will come back and do a retest of that level, with really hopes that it will continue a trend to the downside. So with this whole situation and with these old technical expectations here, there is a likelihood that price could still retrace back to the upside. So we are going to be taking this one too into consideration. So right now we are going to be focusing on this old channel that has existed in this market in the last 15 hours, I guess. In the last 15 hours, we have this whole setup here, giving us a clue that there is an indecision in this market. So will this whole structure turn out to be a trend continuation pattern, that is price turns out to be either a flag pattern, a rising wedge, or a bearish rectangular pattern that will break down, then go to the downside for a trend continuation? Or will it turn out to be a reversal pattern where price action continue to find higher highs, then we have a neckline, then a breakout of structure will incite a move probably into the structure, the trend line, or even break the trend line at one point in time? So these are things we are going to be looking at, and for us to identify what is going on here, we will be scaling down to a much more lower time frame, like the 15 minutes time frame, to see things more clearly. So let's scale down to the 15 minutes time frame. So here we are on the 15 minutes time frame, and what we want to do right now is to acknowledge what has been going on here in the last 15 hours. And to do that, I want to zoom this in. I hope we can see my screen clearly. So we have this whole structure figured out here. Bring out our line chart, and then what I'm going to be doing, I think we have a key level which falls exactly along the $74.35 level, which I will be giving a gold color. $74.35 level, 74.35 level. Okay. So we have that figured out at this point. Then we have the support line here. This is the lowest point price action has gotten to in the last 15 hours now. So we have the $74 mark, a very strong psychological level there. So I will be marking that out. So we call it the $74 mark. Now that we have a support line figured out here, then we should be having a resistant line too as well, which will fall at exactly the, hold on a second, $74.65 level, I think. So we have the $74.65 level here. So now things are getting a little bit clearer now, and we are going to be having a little idea into what could possibly happen during the New York session and the London session today. Then another thing that we'll also take into consideration is the fact that since price action tested at $74 level, one thing you will notice is that there is some buy pressure around this area, and this is evident after citing that higher lows in this market. And what we want to be doing is to connect the higher lows so that it can give us a trend line, which definitely will be serving as our yardstick for trading activity today. So we are going to be bringing out our trend line, connect the series of higher lows here, giving us that beautiful trend line, which will be one of the parameters we are going to be using to guide our trading activity for today. So here we go. So let's go back into our candle chart and see if we could do some readjustment to suit in the current structure, as you can see here. So now, obviously, what you will see first of all from afar is the fact that price action is trapped within a channel between the $74.65 level and the $74 area, giving us a flat channel, obviously. And you all know what we look out for whenever we have a flat channel. We want to see price action either break out of that structure to the upside to give us some buying opportunity, or break down to the downside to give us a selling opportunity in this market. And with the look of things right here, we also have a key level which has sliced this whole channel into half, and we can see that as soon as price climbed above that $74.35 level, we have been seeing buy pressure resume around that area since the early hours of today. So it appears that the $74.35 level is beginning to gather some bullish momentum, which at this point could be seen as an accumulation phase. So right now, what are we going to be doing here, and how do we intend to take advantage of any potential trading opportunity? It's a very simple thing. I hope for those who are still in a sell position, hope you had moved your stop loss, because anything could actually happen from this point. So if a breakout of the $74.65 level happens, we want to be looking at we are not getting too excited at the breakout of that structure. We want to see some confirmation to happen. Remember, this is a counter trend opportunity. We are within a very strong bearish move, and to jump into a bullish move at this point needs a level of patience around this area. So once the breakout of the structure happens, we want to remain patient for price action to give us more evidence that buyers are gradually gaining momentum, and we shall be seeing this reflect on the chart as a retest of structure, price coming back to retest the $74.65 level, and it could still come to as far as retesting the trend line. But the most important pattern we want to be seen from the structure is buy pressure, which would transition into something like a reversal pattern. It could be a double bottom structure, inverse head and shoulder pattern, after which we want to be part of that move to the upside. And remember, this is going to be a counter trend opportunity, and if this happens, we please note here there is a caveat to this whole setup here. If we are buying above the $74.65 level, a whole lot of attention will be required at this point. So if you are not someone who is comfortable taking counter trend opportunities, I would advise you to stay clear of this position, of this buy expectation, and wait for the bust stop on the higher time frame along the trend line we identified for more selling opportunity. And this is what I'm saying here. Let me zoom out so that you can see. So we have this whole structure. If a breakout happens and price action continues to the upside, we want to be around so that we can move our stop loss accordingly, lock in some profit as we continue to monitor price action all the way to the upside. Now, as soon as price gets into the structure, we secure more positions and then wait to see how price action will be reacting to the $77.69 level, where selling pressure around this area could incite a bearish momentum to the downside, and a breakout of that structure could incite a trend continuation to the upside. So whatever happens around the $77.69 level will decide if we are going to be adding more buy position or getting ready to join another trend to the downside. So that is how we are going to be looking out for buying opportunity today, which is more or less on the counter trend side. So with that being said here, after talking about this, we want to look at the potentials of the sellers at this point too as well. Now, with the whole situation we have here, let me zoom this in a little bit so that we can see clearly. So what happens if price action does not break out the $74.65 level and instead it continues to drop to the downside? Now, the first sign that we are going to be seeing here that will suggest that we should start getting ready to join a trend continuation to the downside is the breakdown of this trend line. And as you can see, the trend line also shares a beautiful confluence with that key level at the $74.35 level, which is going to be serving as our yardstick for selling opportunities in this market for today. So what we want to be seeing here is, first of all, we want to see a breakdown of the structure. We are not getting too excited at this point as we still need some confirmation to happen. So right on our lower time frame, it could be your 3 minutes, your 4 minutes, your 5 minutes time frame, whichever case it may be. We want to look out for retest of structure where we start seeing selling pressure. That is, buyers are finding it difficult to climb back above both the key level and the trend line. Then if this happens, we want to be getting ready to join a decline to the downside. Then a further breakdown of the $74 level will be a massive signal that we are going to be going fully in for another crash to the downside, as price action would have taken out the buy positions around that level. So this is how we are going to be selling the US oil for today. So I've been able to portray the two potentials we have here, how we want to be buying the US oil and how we want to be getting ready to even sell. So let's wait out for the structures to mature. It will take quite a time before all this whole situation lines up for us. So you require a level of patience to be able to be on standby to catch this move. And be rest assured that I will be with you right in the comment section on my TradingView and Telegram platform to give you an update on what to look out for and how we intend to take advantage of that trading opportunity. So with that being said here, I think I'm done on the US oil. If you do have any question, let me know right in the comment section, and be rest assured I'm willing to be of help in that regard. So with that being said here, let's move on to the next pair. I'll be checking the comment section to see if there are any inquiries as I go on with the next pair. So the next pair we are going to be looking at this morning is the GBPUSD, and I'm very sure for a lot of people out there, the GBPUSD market structure for this week will be an headache for majority of participants in this market, and I quite understand, because the market has been a lot been choppy in the last 48-72 hours in this market. As you can see, we had some buy positions at the beginning of the week after we saw the breakout of the 21.24550 level, which happens to be our key level for the week. We also had some sell position at one point, but didn't last long before we were taken out of that position. And yesterday too as well, we had some sell positions here. We had some buy positions above the structure too as well. So it was quite a lot of choppy situations, which at every point in time we didn't see our moves last very long, which is quite understandable. But we still need to be on the positive side, as we want to still catch up with any potential opportunity in this market. So before I go into the details here, for the sake of clarity, I would like to share with you how we and the commentaries on my public platform on how we actually navigated through all this choppy situation. So the profit we had made so far on the GBPUSD this week isn't that significant at all, as we were taking out every position didn't last long at all. So let's look at what happened during the since the beginning of the week. So we had this whole situation here where price action was caught within that channel between the 1.24550 level and the 1.241. And you know what we look out for whenever we have this kind of flat channel. We want to see price action break out the resistance line for buying opportunity, or break down the support line for selling opportunities. So with our buy stop order above the 1.24550 level, we had our first buy position for the week triggered, as you can see here. And I informed us duly that the position has been triggered. So at this point, we still cannot secure position yet, as it's still very, very early, of course. Now, I think about a couple of hours after, so I told us all to secure the buy position, as we have a couple of bullish candles gradually coming in at this point. Then we continue to guide our positions as price action continue to the upside, and at this point we were thinking that we are really going bullish for this week. And what happened afterward was quite interesting, as we saw the out sellers came in I think close to the end of the New York session on Tuesday to take us out on all of our position with a small profit at that point. Then we waited to see how price action will react to that key level, had the 1.24550 level. Obviously, you know that whenever price action breaks out of a key structure like the 1.24550 level on your screen, we expect that one point in time price might likely come back to do a retest of that structure to incite a trend continuation to the upside. So we are waiting to see how price action will react to that level. So on a safer side, we were looking forward to buying opportunities. So we were looking out for reversal patterns like double bottom structures that will support a bullish momentum at this point. Now, see what we saw here on the 15 minutes time frame. So I identified the setup on the 15 minutes time frame. That was right during our live session that day, and we had a key level at the 1.24750 level with a couple of trend lines here where we said a breakout. Remember what I said there? I said a breakout, then a retest of that structure, as we still need some confirmation to happen before we join that move to the upside and that was exactly what we okay, that was not what happened. We had price break out a little bit, then drop down to the downside, and remember we had a sell stop order below the 1.24550 level, which happens to be the key level for the week. And you know, whenever price action breaks down our key level, we're looking out for selling opportunities. And look at what happened here. We had our sell stop triggered, and price action broke down the trend line, and we continue to ride the move all the way to the downside. Then this also didn't last long. As you can see here, we had some buy pressure resume. Since we've moved our stop loss to secure positions, we were taking out again with another small profit at this point, as we saw buy pressure resume in this market. Now, during our live session yesterday, this was what we were looking out for. We identified a new structure at the 1.2470 level. So I told us all here that we might likely see a consolidation phase around this area and before a bullish momentum happen. And I told us all that we should be having a buy stop order above the 1.2470 level, considering this breakout of the structure that happened earlier. And this was exactly what happened. We saw price action breakout of the 1.247. Price action continued to move to the upside. We saw the breakout of the 1.24852 as well, triggering the second position, and that also did not last long. After we had secured all our buy position, we saw how we was topped out on all the buy positions that we had with a small profit, or at a worst case scenario had break even. Right now we have a whole situation going on right now. I think about after that time we had a sell position, also anticipated a breakdown of the 1.247 for a sell position. We had that position triggered. I told us all to secure the sell position as we look out for more opportunity, but that did not happen. And this morning I woke up to the chart to see that we have been taken out of that sell position at break even again, as price action had continued into a consolidation phase. So right now we are going back into the live chart to decipher what to expect during the London and the New York session today. Now, if we look at this whole structure closely and look at what has been happening since the beginning of the week, the first thing you would observe here is that though it has been bullish since the beginning of the week, we had this whole bullish trend line figured out here. But one important thing that happened here was that as soon as price got into the 1.25060 level and the 1.24850, we have been seeing selling pressure resume from that area. So you can see every attempt by the buyers to even break out of the structure, at every point in time we see how sellers had continued to negate any bullish momentum at this point. And this tells us a lot in this particular market, that sellers are really strong at this point. So it's very reasonable that we remain patient for any buying opportunity in this market, as we need a significant breakout of that structure, taking out all the sell positions within this zone to give us that confidence to be able to buy the GBPUSD. And in that regard, I'm looking forward to buying opportunity at the breakout of the 1.25060 level to be part of any bullish momentum at this point. So if price action does not break out of the 1.25060 level, how would I be thinking of buying at this point? Now, in as much as we have seen selling pressure resume below the 1.25060 level, it is looking more bearish at this particular point in time. And the reason why that obviously is because of the sell pressure here, and we might likely see price action drop further to the downside anytime soon, giving the dollar a bullish traction. And if we saw what happened here a couple of days ago, we saw the breakdown of this trend line for the first time in 3 days. Price action broke down that structure, and since then we have seen a situation which looks like a technical expectation that price will come back, do a retest of that structure to incite a trend continuation to the downside, which is looking very possible at this point. And with this kind of scenario here, another thing we will take note of here is the fact that after this impulsive move, we saw the sharp rejection of the 1.25060 zone. Price dropped back into our key level, had a 1.2455, and then we saw this whole move happen during the early hours of today, and we saw how sellers negated the bullish momentum again, had a 1.24850 level. And what this simply tells us is that buyers are finding it difficult to find a new high, as this whole high here is yet to be broken. And with a lower high at this point, we might likely see this whole structure transition into a reversal pattern in the form of a double top structure. And you all know what we do whenever we start identifying the evolution of a double top structure like this, the next thing we want to be doing is to identify a neckline, which shall be a platform upon which we want to validate the reversal pattern. And coincidentally, the neckline of this potential reversal is still a potential structure because it is not yet confirmed, falls exactly at the 1.24550 level, which happens to be our key level for this week. For those who have not watched the video on the GBPUSD, I laid a lot of emphasis around the 1.245 and how we decided to use that level as our key level. So you might want to watch the video in the description box below on the GBPUSD to have a better knowledge of how this came by. Now, with this neckline formed around our key level for the week, I'm looking forward to a breakdown retest of that structure to give me that confirmation that we are good to sell. So at any point in time, it's appropriate to have a sell stop order below the structure, but if you are a conscious trader, you might want to wait for price action to break down, retest on our lower time frame, look out for selling pressure before you want to be joining that decline to the downside. Then we also have a structure here at the 1.24100 level where we could also add more position to our existing trade if price action ever breaks down that structure. So this is what we shall be looking at for today on the GBPUSD. So let's look out, let's be on standby to catch this move. If you have any questions, feel free to let me know right in the comment section. So with that being said, here I will be moving on to the next pair, and the next pair we shall be looking at this morning is the XAUUSD. Is the XAUUSD, and on the XAUUSD, just like what we had on the GBPUSD, we have a whole choppy situation going on here as well, and currently price action is just right around our $2,000 mark. We are going to be talking about that in a moment, but let's quickly run through how the week started for us and how we navigated our way through the XAUUSD. Now let's go into my commentaries on the TradingView platform, where we so the week started where we saw our price action was trapped within the 1,985 and the 1,977, giving us a consolidation phase. And you know what we do whenever we have this kind of simple setup, we want to see price action either breakout or breakdown of that channel for a trading opportunity. But in this case scenario we have here, we had a huge demand zone sitting at the 1,975 and the 1,970 level, which is more or less a signal that we should be looking out for buying opportunities. So we were more of a bullish expectation at the beginning of the week here. So we had a buy stop order above the 1,985, though we had some selling pressure come in to shake out a lot of bull buyers in this market, though we were not in any trade at that point before we now saw this simple setup I was able to spool out on the 30 minutes time frame to guide our trading activity after citing this bearish candle here. So we had this whole structure figured out on that day, and we had a buy stop order above the 1,985 and a sell stop order below the 1,975 just in case a breakdown retest of that structure happens. And we can see what happened here. We had our first buy position triggered as soon as price action broke out of the 1,985, and we continue to ride this move all the way up, giving us about 120 pips thereabout before the sell pressure began around the $2,000 mark again. And look at what we had here. We also had another setup looking out for buying opportunity at the breakout of the 1,991 and selling opportunity below the 1,985, and selling pressure was what we saw here, triggering our sell stop order below the 1,985, and we continue to ride the move all the way to the downside. And this was a couple of days ago actually, and we were looking forward to more opportunities, but what happened instead was interesting here. We saw our buyers came in, taking us out of our sell position again with a small profit. So it has been quite choppy, just like what we had on the GBPUSD, and this is as a result of the US dollar event coming in from the US economic docket as regards the health situation of the banking sector. It was just 2 days ago we realized that the First Republic Bank lost $100 billion in form of withdrawals, as majority of their customers are not having that confidence in the regional banks anymore. Hence, they're moving their funds to the national banks, and this actually affected their portfolio negatively. And this resulted in their shares falling by 27% a couple of days ago, which is not a good sign for the banking sector in the US. And majority are moving their funds into commodities and like the gold and this has been causing a lot of market influx around the US dollar pairs in the last couple of days. And this is the reason why we have been seeing this whole situation happen in this market. And right now we saw this whole situation here happened a couple of days ago too as well. And yesterday we had a buy stop order above the 1,991 level, hoping that price action will break out of that structure, since we have been seeing buy pressure resume just above the 1,985. So with a buy stop order above the 1,991 that was two days ago, we saw this buy position triggered, breaking out of the $2,000 mark for the first time this week, and we look forward to more opportunities to add more position to our existing trade, but that did not happen here. Price action dropped to the downside, consolidated with below the $2,000 level for a while, and this was as at our live session yesterday we had this whole simple setup that we had here. So we had a situation yesterday morning where price action was trapped within the $2,000 mark and the 1,994 level, where we were looking out for either a breakout or breakdown of that structure. And mind you, for those who are already still in the buy position yesterday, we agreed that we are going to be moving our stop loss to lock in the profit we had made so far as we continue to monitor this price action. And with a buy stop order above the $2,000 mark, we had the buy stop order triggered and price action moved in our favor for a while. I think about 80-90 pips. I told us all to secure the position. This is the information here. Secure buy position. And what happened within minutes, I think within 30 minutes or so, we saw that we were taking out of all the buy positions we had at another small profit, or at a worst case scenario of break even. So it has been quite a choppy situation for us since the beginning of this week on the XAUUSD2 as well. And with the whole situation we have here, we are back on the 1 hour time frame live chat. And how do we intend to trade this at this point? Remember, we have our key level for the week at the $2,000 mark, and as long as price action remains below the $2,000 mark, we look out for selling opportunities. And if price action breaks out of the $2,000 level, buy pressure above that structure, we look out for buying opportunity. But with this case scenario that we have seen here, and if I zoom out into what has been happening around the $2,000 mark and the 2010 since last week, you will see how that level has been a very, very strong selling niche in this market. Look at what has been happening since last week within this area. Every time price action comes into that structure, we saw how sellers negated the bullish attempt at that point. And this tells us only one thing, that the sellers' presence in this market is still very, very strong. And this is likely being driven by the emotion of fear, as we are at a high structure right now, at a high price right now, where majority are not sure if the gold is going to crash. And remember, we are looking forward to the Federal Reserve's interest rate decision coming up next week, that is May 3rd. And this is a whole lot of expectations is still running through the market, and majority are saying that the interest rate is likely going to be increased by 25 basis points. And this will be good news for the dollar, because majority will want to move their funds into the dollar if the interest rate increases. So these are things that we are looking forward to. And the Federal Reserve itself is going to be watching the economic data. And today we are looking at the GDP today, which is also going to be one of the major indicator if they are going to be increasing the interest rate or not. So these are things we are looking at, and this has caused this whole choppy situation we have here. So what I will do here is, first of all, it has been quite bullish this week anyways, but one thing we saw that as soon as buyers got into this area, we have been seeing selling pressure here. So I would like to readjust my trend line to capture this whole bullish face that we have here on this chart. So we have this all set up here. Hold on a second, let me see. Okay, I think it suits it exactly. So I will just delete this one, and then we maintain this one here, and let's see how this is going to play out. Okay, let me use this to capture this one too as well. All right, so here we are right now. So we have a situation here where price action is trading just around the $2,000 mark in the last 4 to 5 hours in this market. And personally, I would advise us just remain patient at this point. I actually gave an update this morning where I said we are going to be buying the breakout of the $2,000 mark, but at this point, let's scale down to a much more lower time frame, like the 50 minutes time frame. Let's see what the structure here is evolving into. Then that will give us a clue into what to look out for. But from what we have on the 1 hour time frame, it's looking more bearish at this point in time. So when we scale down to the 15 minutes time frame, what can we find here? So this is the 15 minutes time frame here, and I would rather use a new chart so that things will be a little bit clearer. Okay, let's use a new chart, please. I want to use a new chart for this one. Okay. Okay, so we have a new chart now, and this is the 15 minutes time frame. And the first thing you will observe here is that we have a consolidation phase around that $2,000 mark, which is a sign that sellers are trying to push price to the downside. And look at the previous high here at 2010, and price is yet to find a new high. Instead, we're having a lower high, which is a sign that sellers are gradually gaining some momentum. So what we are going to be doing here is to acknowledge a key level, which we are going to work with for today, which is the 1998. So we shall label this 1998 level. Okay, so that is that there. And if we bring back our candle chart, okay, we can see we have something that looks like a reversal pattern. So following this impulsive move, we have something like this. We have something like this, looking like an head and shoulder pattern where the right shoulder is yet to be formed. And the breakdown of this structure definitely will give us that privilege to be part of a bearish move. Then besides that one too, I also have a trend line identified here. If we look at this closely, we can see we have a trend line here, which we're also going to be using to guide our trading activity for today. So it's looking more bearish at it, though it's on a bullish tone, but it's looking more bearish that there is likelihood that a reversal pattern could come in at this point. So we are looking out for selling opportunities right below the 1998 to join this trend to the downside. So if price action breaks down the 1998, we look out for selling opportunities in this market. So let's see how this is going to play out in the next couple of hours, and I will be with you right in the comment section on my Trading View and Telegram platform to give you an update on what to do around that area. So that is that for selling this one. Now to buy, I would want to see price action break out of that $2,002 mark level for me to buy this one today, which I doubt because of the structure here. I doubt if buying opportunity will come, but if it does break out that level, then we will have no choice than to look out for buying opportunity. So let's have this buy, breakout, retest of structure. So bring back this, and so here we go. In fact, let's have a sell stop order below the 1998. It's looking very bearish at this point in time. Let's have a sell stop below the 1998, and we have a stop loss right above the 2000 or around the $2,002 mark, which will be dovetailing to about 40 pips. thereabouts in that one. So let's do this and let's hope that price action will continue to the downside, and if it does, we continue to move our stop loss, secure the current position as we continue to we look out for more opportunities to add more position to our existing trade. So this is what we are looking at on the XAUUSD today. If you have any questions, let me know right in the comment section. So moving on right now, we'll be going into the last pair for today, which is the USDJPY. And on the USDJPY, we have a very interesting setup during the early hours of today, which I actually shared on my public platform. So if you have been following me either on my trading view or my Telegram platform, you would have seen this update here. So the same thing has been happening on the USDJPY. We have a choppy situation actually, and though price has been bearish since the beginning of the week, as we had some sell positions in the last 48 hours after selling below the 133.800 level, which happens to be our neckline of that reversal pattern we identified on the daily time frame. And since the breakdown of that structure happened, we were thinking that that neckline could probably be negated and then turn out to be a bearish move. But interestingly, what we saw here in the last 48 hours is giving us a clue that buyers might likely be taking over this market anytime soon. And one key thing I saw about this whole structure here, after considering what has been happening in the last 48 hours, is that we are having a reversal patterns in our hand gradually unfolding, and which is coming in the form of a head and shoulder pattern, inverse head and shoulder pattern here. As you can see, we have the head, we have the right shoulder, and interestingly, the key level at the 133.800, which was actually our neckline on the daily time frame, happens to be the neckline of this head and shoulder pattern at this point. And I shared this on my public platform this morning that we are going to be looking forward to a breakout and retest of that structure to be part of a bullish move. And in fact, I had a buy stop order above that level. Hold on a second, let me go through that. So this is what I said here this morning. I said the key level at the 133.800 level is still a key determinant of price movement, as it becomes a neckline of a potential inverse head and shoulder pattern. We are waiting to see how price action reacts to the zone between the 133.800 and the 133.500 for the next line of action. And that is the zone here that is between this area and this area. And we can see within this area here, you will see that price had consistently found higher lows in this market, giving us a clue into buyers gradually gaining some momentum. And in addition to that is this trend line, which was supposed to be our yardstick for trading activity for this week, as we all knew yesterday that as long as price action remained below the trend line, we feel comfortable in our sell position. But interesting enough, since the early hours of today, we have seen how price action has broken out of that trend line, giving us a sign that the trend line may no longer have the capacity to negate any bullish momentum here. And since the breakout of that neckline, I was strongly believing that a breakout of the neckline at the 133.800 will be triggering a buy position. So with a buy stop order above the 133.800, we have a buy position triggered at this particular point in time. And let's hope that price action will continue to the upside, especially as we anticipate the GDP data coming in about 3 hours from now. So stop loss should be somewhere around the 133.500 or below it a little bit, which will be dovetailing to about 35 pips in stop loss at that point. For in the meantime, we should have our TP target at the 135.00 level, dovetailing to about 120 pips. And trust me, we have structures here that has a tendency of giving us multiple entries so that we can maximize our profit on the USDJPY for today. So let's see how this plays out in the next couple of hours. Obviously, I will be with you right in the comment section on my trading view and Telegram platform to give you an update on what I think is going to be happening in this market. So on this note, I will be calling it a day here. It has been a wonderful moment, and we have quite promising setups that we are going to be using to guide our moves ahead of the GDP today and post the GDP to as well. So let's be on standby so that we can catch this move. And for those who have running positions presently, kindly move your stop loss accordingly. Let's lock in some profit. Obviously, we don't want to lose out on whatever we had made so far. So let's see what works out for us in the next couple of hours, and I will be seeing you right in the comment section on both my Trading View and Telegram platform. And it's on this note, I wish you best of luck today. Do have a wonderful day, and see you right in the comment section as we continue to monitor price action. Bye bye.